Hey, how's it going, everybody? I just want to thank you guys who checked out my last video titled What I've Been Up to. It was a video put out last week just describing some of the things I've been up to during this pandemic. Times where we had to stay in, we had to shelter in place, try to keep ourselves safe and healthy. And I mentioned that I started getting myself into photography, heading out to the parks and taking pictures of couples and families and different things like that so they can capture their memories. And that's one of the things I started doing so I can have some side income outside of my regular 9 to 5 job. But one of the things I didn't mention that I've been doing for the last actually 3 years is stock investing. Everybody should have some kind of extra nest egg put to the side where they can, put away for vacations or a little bit of play money, or if a really large opportunity comes up, they can have something to, take advantage of an opportunity that comes up, a business opportunity, a chance to buy a piece of property, or to buy a vehicle that has a really really great deal. It's just once in a while type deal comes up. You have some type of nest egg. You can go and take advantage of that opportunity. So what I wanted to do in this video was just kind of talk about how I put some money away, I put it into the stock market, and it's been growing and growing, doing consistent. But over the last maybe year and a half, my account has really taken off as I developed, my different skills and my strategies. And as of today, like November 10th, my account for the last 1 year is up 101%. It's actually gotten all the way up to 114%. And of course, the market is volatile right now. So it's gone up, it's gone down. But as far as the last couple of days, it's been down, but it's at 101%. Now, for some people, that might seem kind of unbelievable, but I'll put the proof right up here, screenshots straight from my account, from my phone. And that's what I'm going to be referencing throughout this entire video is how in the world could I be getting 100% return on my money in a year? Now, it's not typical. The market over the last, say, 75 to 100 years has returned on average 8, 9, 10% year over year, which is it's not a bad return in your lifetime of your career, 30 years working. You put money away every month, you'll be kind of set for retirement. But for people like me, I'm not trying to wait all the way until I'm 70 years old to retire. So what I've been doing is applying different strategies to make sure I'm at least exceeding 30, 40% in a year. This past year, I just happened to get all the way up to 100%. There's a couple of reasons why. Some of the ways may not work for everybody. Simple fact, it's kind of risky. The reason why it's risky is I was using leverage on my account, which means borrowing money from my stockbroker, basically to increase the size of my positions. That way, if I'm going up 10% in say a month, well, with the money I'm borrowing, I'm actually going up 20%. So that'll have to be a whole nother video because it really is. It's a lot that goes on when you're using leverage. There's a lot of risk as well as reward. So that's something you really want to take your time and think about before you go and do it. So as far as just regular stock investing, just a regular account, putting some money into regular shares of stock, I use the Robinhood app. And for the last close to a year, of course, we've had COVID. Started off around February 2020. Right now, this is November 10th, 2020. So the market's had a lot of ups and downs. Really, it's been driven by news stories and the political environment, surrounding, what should we be doing about COVID? What should we not be doing? What about stimulus packages? Are they coming? Are they not coming? That would drive the stock prices up, down throughout the year. So for a lot of people who, use the strategy of just buy and hold, right now they're doing good. They're probably up, say, 20% for the year, which is not bad at all. That's a good return for, say, the last year or year to date. January 1st through now. It's not bad. But if they were kind of doing like I've been doing, in and out, buying and selling, looking for companies that are overweight at this time and then go back and catch them when their price drops and buy them back again, you could get more like 50, 60%, or myself, I've gotten 101% over the last year. So I'm going to go through a couple of the companies that I've been kind of jumping in and out of. I'll build up positions and then chop them down when the price is high, go back, buy them back when they're low. And just give you an idea of how like the companies are right in front of us. It's no big mystery. I didn't go and find some upcoming tech company and then buy 1,000 shares of them and all of a sudden they explode in value. I was buying regular everyday companies that everybody knows and recognizes, except for a lot of people who don't know. They can just use their phone, go download the app, buy a share of, say, Microsoft for today. You could have got it as low as $210 a share and just held on to that one share until you had enough money to buy a second share. They don't know it's like just that easy. So that's when I'm going to start making videos a little bit more often. Just let everyday people know it's really not rocket science. So I mentioned Microsoft. What I'm going to do is I'm just going to screenshot a few things from my phone. I'll just put it up here. I'll just take a look at it. So Microsoft has grown over the last year 44%. So that would be last year, November, through this week, November, 44%. That's a great return. So anybody who just was buying Microsoft, holding it, they're happy right now. How could you have gotten more than 44% though? The way you would have got more than 44% is, I'm going to put up on the screen where I just sold a few of my shares of Microsoft. All right, I see one share of Microsoft leaving here at about 227. Now, those are just a couple shares that I sold, but I went back and bought those same shares back at like 206, 203, and now the price is at 210. But just a day ago, the price was 218. So the price of Microsoft has just been fluctuating over the last few weeks, just up and down, which is normal. Over the long term, it'll be trending up. But in the short term, it can be up or down 5 to 10% easy. Now, if you are selling it when it's 20% up for the month, and then you're buying it back after you see it drop 10 or 15%, and then you wait for it to go back up, now you just made off that one stock, you just made an extra 10 to 15%. So if you had, say, $1,000 in Microsoft, if you just held it, you'd be looking to gain, say, in a certain time period, 20%, which would be $200 off of $1,000. But if it was up that 20%, you sold it, you notice, oh man, it came down, lost all those gains because coronavirus has made everything pretty volatile. All that 20% is gone, but you sold most of it. So now it's down back to the value of $1,000. You go ahead, buy those same shares right back, wait for it to go back up in the next month, that same 20%. Now you just realize, okay, instead of just being up 20%, you're up 30, 35% in just a little bit more time versus if you had just held those same shares. Another thing I've been doing, say Apple is down, Microsoft is up. I can sell some Microsoft shares, go buy some Apple shares while they're down. Apple did a stock split actually a few weeks ago. Before the split came, their stock price was just skyrocketing. It was just going up just because people wanted to get into the stock before it split. I think they did like a 4-to-1. So something like $500 a share. It was split into 4 shares. So then each share that you own would be worth $125. So people were just buying it because they wanted to have their shares already before it split. Then when it was split, they would just have a bunch of shares. So that was driving the stock price up because they typically go up if people are constantly buying them. So yeah, I was buying Apple at the same time too. And as soon as they split, price went up a little bit more, I was like, you know what? The value is pretty inflated. It is overweight. I'm going to sell some. I think at that time I probably owned something like $3,000 in Apple. And I went on and just, probably sold half, something like that. And it was just in time. Sure enough, stock price over the next few weeks started, trickling down, and they came down probably at least about 15%. I bought those same shares right back. So now I'm just holding them, waiting for the next thing to happen, some kind of news to come out. And Apple and Microsoft are just two companies that are really, really similar. So if one price is up and the other is down, you can kind of trade off of those two companies, keep pivoting back and forth between the two companies, knowing one or the other in a time period, one of them is going to be going up. And if they're doing the opposite thing, you can bounce back and forth and basically make double the money. And that's how you get higher returns than just the typical 15, 20, 30% in a year. That's how I got up to, closer to 101%. Some of the other companies I was working on, since it's coronavirus season and all that, I was buying consumer goods, things like Procter and Gamble, Kimberly-Clark, and companies like that where they make household goods. I even bought like Colgate. I was buying Dollar General, Dollar Tree, things where I knew people had to go to these stores to still shop. Gotta buy toilet paper, gotta buy tissue. So I think it's called consumer goods. So I was buying those companies not thinking, okay, I'm going to make a killing off of them, but I knew they would be stable. They're going to be growing. Their revenues are going to be going up at least while we're stuck in the house, while we, have to deal with COVID concerns. So that was like where my safe money was. Then the more kind of play money I was putting towards just kind of jumping in and out of technology companies. Companies like Tesla was doing really, really good. Went up. They did a split. And after that, kind of just been stagnant. So I had money going in and out of Tesla, electric car company, NIO, different, what they would call speculative investments. That's why I was making some more money, but I wouldn't leave them in there too long. I'll go in for a few weeks, make some money, pull the money out, and notice a company like, say, Procter and Gamble would be down for just really no reason, just down 6% in a week for no reason. Go ahead, put the gains from, say, selling some Tesla, put that into Procter and Gamble, let it sit there for a while growing in a more safe manner. So basically, I was using some margin, which that's gonna have to be a whole video on its own, how I use margin to increase the amount of money that I would have in my account. Therefore, the amount that's growing would be bigger. And that's one way to, increase your gains. And then if you're buying and holding, you can expect a certain amount of gains. But if you know kind of when to jump in and out, with everything being, the market's moving just because of headlines, okay, well, you kind of know some headline is going to be coming out every week. Some kind of tweet was going to go out. Some type of coronavirus news was going to go out. The first wave of coronavirus, second wave, third wave of coronavirus. Everybody's panicking, selling their shares. And that's the time when you see your account was up, sell some. People get scared, start selling their stocks. You're going in buying that same stuff. When the politicians were talking about the package, the stimulus packages, they kept talking about the package is going to come. The stock market goes up. I would sell some of my stock at that point because they kept going back and forth. Next thing you know, 2-3 days later, the talks are off. Market will go down another 5, 6, 7% in just a few days because talks about stimulus package was gone. So with all these different headlines, I would just jump in and out. Certain stocks, some I will hold, some I will go in and out. And in future videos, I'll kind of pick through some more of the specific stocks I've been working with in the last year. But thanks for watching the video. I know it's a little bit long. I'll probably sound like I was just rambling on and on, but it was kind of like off the top of the head. I just want to kind of share some of the things I've been doing with my investments. And hopefully you guys can get some value out of this video and future videos. and I'll start trying to get myself a little bit organized and just hone in on certain techniques and certain stocks that I'm following, and keep the videos coming a little bit more regular. That way, if anybody kind of wants to get some ideas of how they can develop their own strategy, they can kind of have something to kind of like a little bit of a blueprint. You never want to copy anything that somebody's doing. Some random guy on YouTube, you don't want to try to just copy what they're doing. The amount of money that you're going to be using is going to be different. The time that you buy and sell your stocks is going to be different. They may move on from a certain stock and leave you sitting in there not knowing that the stock is about to take a dip. So you never want to just follow anybody word for word, but you can develop strategies from things that you're seeing in other people's how they do things. So hopefully you get some value from this, and I'll see you guys in the next video. Thanks a lot for watching.